Okay, still on the personal income tax. Remember, today's topic is on tax assessment. How much tax you're supposed to collect from different taxable individuals. We have defined who the different taxable individuals are, from the companies to the employee to the self-employed to the person in the informal sector to estates. When we talk about estates, we're talking about family trustees, those kind of estates, not physical estates. What type of tax they're supposed to pay. Right now, we are reviewing the individual personal income tax collectible taxes. What are you supposed to charge? So this is what we are reviewing now. We've done a whole lot, but I want to break each down in naira and kobo, how much tax you're supposed to collect from these different individuals in the personal income tax category. So number one, we have those that are earning 800,000 naira and below per annum. As I explained in our previous class, most Nigerians, seriously, if you are an entrepreneur in Nigeria, you earn above 800,000. Most. Even if you are a bole seller, you're making in a day 2,000 and 5,000 a day. In a month, that's about 150,000 naira. In a year, it's about 2 million naira. You'll be very surprised at how much you earn. So this is really for the lowest of the low. But if a person is earning less than 800,000 naira, the percentage of tax to collect is 0. Then the next category is those with income between 800,000 and 3 million naira. You're supposed to collect 15% of their annual earnings after deductions. We talked about what you're supposed to deduct from them. After deductions, you're supposed to charge 15% of their income. Then those that earn between, or that have earned, because tax is on what you have earned already, between 3 million and 12 million naira, their tax to pay is 18% of their income. Then those from 12 million to 25 million are supposed to pay 21% of their income to government as tax. That is not all. Those between 25 million to 50 million naira annual income are supposed to pay 25% of their income after deductions as tax. We have talked about what qualifies for deductions. We talked about rent, expenses, income generating expenses, mortgage, pension, lots of, even the tax itself, you deduct everything before you charge the tax. Then those above 50 million naira per annum are to pay 25% of their income. Example, so I'm going to give an example. An individual that has earning about 700,000 annually pays 0 taxes, fully exempt under the threshold. This provides relief for entry-level workers or informal traders who are really on the poor. There are lots of examples I have here which you can get in the course manual. So I put a lot of examples. Then let's go to the company income tax. The company income tax includes those limited liability entities, collective investment schemes like mutual funds, insurance firms, tax on assessable profit after deductions. Example, capital allowances at 10 to 25% depending on asset class. This is for assets that are held by companies, not necessarily on the company income. Research and development fund up to 5% of turnover is exempted. Donations up to 10% of pre-tax profits. Small companies are exempt, for example, while large ones face 15% minimum effective tax rate, calculated, cover tax paid, adjusted profit with up to, but not below 15%. Capital gain tax is on 30% of gains. For example, asset disposables. We're talking about investment assets aligned with company income tax. A development levy applies to accessible levies like educational taxes. Okay, so let's break it down now on the tax rate for different categories of companies. Different categories of companies. Remember that in Nigeria, companies are categorized into like 4 major brackets. You have the micro businesses, you have the small businesses, small scale businesses, you have the medium scale businesses, you have the large companies. So what is the effective tax rate they're supposed to pay? Small companies, remember that micro companies now fall under the informal sector, so we discussed that already. They are charged on presumptive tax. Presumptive tax, we discussed that. So the next category are small companies. These are companies with gross annual turnover of less than 50 million naira and fixed assets below 250 million naira. Excludes professional service firms. They are supposed to pay 0 company income tax. If you are a small business and your annual gross turnover, that's the total money that you have made before any form of expenses or deduction, is less than 50 million, you're supposed to pay 0 income tax. Then you have the small and large companies. There is no tiered rates, so everything is lumped together. Those that earn over 50 million naira. Before, it used to be 20% for medium scale businesses, but right now everybody pays 30% and not less than 15%. Finally, you have 15% minimum tax rate for multinational entities. You and I know who multinationals are. Those that have Nigerian subsidiaries, but their origin or their major base are not in Nigeria. Group of companies with turnover over 20 billion naira, top-up tax, if effective rates fall below 15%. So there are companies that they have tax consultants that whatever they do, the government is saying that if your company is earning above 20 billion, you cannot pay less than 15% of tax. Then partnerships, 2 individuals that have business that have revenue or between profits is equal but not below 10 million naira. We pay 13%, 13.8% tax. Corporate partnerships, we pay 10%, just like company income tax, and developmental levy of 4%. So all these are contained in the material that you're going to get. So I want us to talk about action steps, then we'll conclude with this. There are lots and lots of exercises, you're going to find them in the training manual, how to issue demand notices and all that. But how do you go about action steps? How do you go about? Number one is data collection, which we talked about before, digital forms and integration, comprehensive. You must develop a comprehensive taxpayer profile. Do your research and come up with a taxpayer profile before the assessment. Who is he? What type of business? How many customers? Can look at the footfall of that company. Then assessment calculations. You remember in the last class I talked about developing an Excel model. So you must come up with a presumptive tax model, Excel model, or with what I've detailed now for different other taxable individuals. Use Excel to build a model, so you slot in the company revenue, what they're supposed to pay just pops up. Accurate, what's the expected outcome of this, of your assessment calculation? Accurate liability determination. Then demand notice issuance. Develop an automated template. We can share with you samples of demand notice. You can create it in Google form or whatever, so that you can issue it, or we can build a software really. You see, a software for issuing demand notices. And outcome is timely notification with appeal info. So every taxing individual can get an e-demand notice sent to them, and then they can appeal or even pay out of it. Next action is cold calling to follow up. We talked about it. We are going to have a class on a call center operation, scripted call with CRM tracking. Call them. Expected outcome: 7% resolution rate on initial contract with those that have issued demand notice. Can get almost 7% to comply with you. And the next action is data banking. Data banking, you have to develop a database, encrypted database. Expected outcome: secure and accessible record of taxpayers for future use. So this is all for today's class. It's really an interesting class, and you're going to get all the materials for you to study about it, how to access individual taxpayers and be able to ensure through constant follow-up that you have 70% success rate with collection. Remember, enumeration alone gives you at least 20% compliance. Then field operations, then you do proper assessment and then follow up. You are guaranteed to have 100% success rate in your tax collection. If you're already involved in tax collection or you want to get in with this training course, you'll be rest assured that you'll be a champion for the government, both federal, state, or local government level. Thank you, and see you at the next class. Bye-bye.